Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. We want to talk to Jorge Ganoza, who is the CEO of Fortuna Mining. Of course, we want to get an update from the company because they had very good Q3 numbers and lots is going on. Good morning to Peru, as you said. You are in Lima. How are you?
Hello, Joachim, and pleased to be in your program again.
Yeah, pleased to see you. I want to disclose also upfront, I'm a shareholder in the company, and the company is also part of our SRC Mining Special Situation Certificate, just for disclosure reasons. Yeah, Q3, I think the numbers were really good. What was your impression?
We had a record quarter, as we stated when we disclosed information for the period. We're really pleased because we're fully capturing the benefit of increasing prices. We recorded a record revenue for the period. We recorded record net income and a very strong free cash flow. We beat the analysts, bank analysts' consensus on earnings per share. We came in with a strong 16 cents per share, where the analyst consensus was expecting around 11 cents per share. On cash flow per share, we delivered 38 cents per share, when the analyst consensus was traveling at around 32 cents per share. So all in all, a very strong quarter where we managed to control our cost, manage our capital spent, and really capture the benefit of higher prices. Right?
That's super, because you are totally unhedged, right?
Sorry?
You are totally unhedged in gold and silver sales.
Yes, we're completely unhedged on precious metals. And, we had a free cash flow generation from operations. After meeting all of our capital expenditures, after paying for corporate expenses and all of that, of $56 million for the 3 months. Right? So very strong.
Yeah, that's super. So that raises the question, will we see the $1 billion revenue this year for the whole year?
Yes. We're fully on track to meet, to breach the $1 billion in sales for the first time in Fortuna, right? And just to give you a sense, in the third quarter, we sold gold at an average price of $2,490, right? In the second quarter, the previous quarter, our average price for gold sales was $2,330. And in the first quarter, going back a bit further, we sold gold at an average price of $2,084. So incrementally, quarter after quarter, we've been selling at higher prices. And today, we all see where the spot price is around, it has breached back again 2,600. So today, we're at a price level that's 5-6% above or what we realized as an average in the third quarter. So, incrementally higher prices quarter after quarter, no? And that only helps our margins. Our EBITDA margin, Jochen, in the third quarter was 48%. I know some investors don't like the EBITDA figure because Warren Buffett doesn't like it. But I think in our business is a relevant measure. Is not everything, but certainly a point of reference, right? Yeah, and our EBITDA margin was, we had a strong EBITDA of 130 million, EBITDA margin 48%, which compares to an EBITDA margin of 44% in the second quarter. So incrementally expanded EBITDA, expanded margin.
Yeah, that is absolutely fantastic. I was also positively overwhelmed from your numbers because I really like it. It's really reflecting everything about those positive markets and that you guys did everything right. But I also really like this because I'm not a fan of debt, and you reduced your revolving credit facility by 100 million down. That is fantastic. I could imagine that saves also money, right?
Quarter third quarter 2024 compared to third quarter 2023, we're saving ourselves around $3 million in financing costs.
Mm-hmm. Super.
Right?
What is the interest rate on that?
375. No.
Wow.
Very competitive.
That's super
so we have
competitive.
exchanged expensive debt for lower cost.
Mm-hmm.
But more importantly, it has been a stated priority for the company.
Mm-hmm.
After several years of investing in the business with the West African expansion, the development of our flagship mine, Seguela, in the Ivory Coast and whatnot, we're coming out of a capital intensive phase. And we clearly stated to the market that our priority will be to strengthen the balance sheet first. I believe that at times like this, with rising prices, mining companies need to put together a fortress balance sheet. And we've been working on that, and we have achieved that, and we're even cementing further that strong, flexible balance sheet that we have in place. What have we achieved? For the first quarter in a number of years, Jochen, we have pivoted into a net cash position. What does that mean? That we can pay all of our debts and we still are cash positive at the tune of about $10 million and growing. One. Second, we have $180 million in the treasury, and we have liquidity available to the company of over $400 million today. And while keeping a debt to EBITDA ratio of 0.2, when our covenants allow us to go as high as 3. We're traveling at 0.2. So what does that translate into? That we have a business that can comfortably meet its capital demands as it achieves, as we move in the achievement of our strategic objectives. We can capture emerging opportunities, value accretive opportunities as they emerge. And more importantly, this is a risky business. With a strong balance sheet, we can manage risks as they emerge as well. Right?
Yeah, absolutely.
So I am very pleased with what we have achieved. And this opens the door for return to shareholders. Right? Now we can invest on the business and have discussions regarding return to shareholders.
Okay, super. Yeah, I mean, to invest in the business also like Diamba Sud, right? That's the next large mine, right?
We have, in 2024, our largest exploration budget on record. Around $45 million is what we're investing in our portfolio. Right? So that is the one of our stated also capital allocation priorities. Strengthen the balance sheet, invest in the portfolio. So we have our largest exploration budget on record. We are advancing the Diamba Sud project in Senegal. So, we're following up with what we've been telegraphing the market. No? Yeah.
Okay, super. So that raises to me also the question I saw with San Jose. My hope was that you can, still operate the mine a little bit longer after those, drill results we saw earlier in the year. But now I thought you want to close that finally down. So how do you want to replace that ounce or those ounces which we will miss then?
Yes, we inform the market that we will be making a decision in the third quarter with respect to the future of San Jose, and we have followed on our promise. No? And we have guided that San Jose will go into progressive closure starting in the first quarter of 2025. What does progressive closure mean? Right? We're developing what's an 8-year closure plan, where the bulk of the closure activities takes place in years 25, 26, 27. And then the mine goes into monitoring, right? That program, that budget, because it's a project, that closure project, still on the final stages of engineering planning. But that's the form that it will take, right? Now, concurrent with the initial closure activities in 2025 and 2026, we will continue carrying some level of mining and silver and gold production, but at a much reduced rate, right? So we still have some high grade resources in the mine, sitting in the Yessi vein, sitting at the Victoria vein, and we plan to, concurrent with initial closure activities, as I stated, recover those resources. So it will be small production, but certainly cash positive that will help fund a lot of the closure activities that are starting in 2025 and into 2026. So that's what will be happening.
Okay, super. So that means there is still something, coming out of the mine, I would call it, and this will take several years, as I understand that now. So that would lead then to the question again to Diamba Sud in Senegal. What is then the plan to bring that into production? Because that would be the next big thing for the growth of the company, right?
You know, like in any company with a diverse portfolio of assets, we have challenges and opportunities in the portfolio as well. So we just touched on one of the challenges. We're losing production from one of our mines. So where are the opportunities? I'll first point to Séguéla before we expand the conversation to Senegal. At Séguéla, in the third quarter news release, we informed the market that we are advancing with key investments to unlock the potential of Séguéla to produce between 140 and 200,000 ounces of gold annually, right? Séguéla in the technical report peaked at around 150,000 ounces. But today, with the success we had with the optimization of the processing facility, we have taken the Séguéla processing capabilities from 1.2 million tons of processed ore per year to 1.7. That's almost a 40% increase with minimum capital spent through optimization of the process, right? So in 2025, we will be advancing some key infrastructure projects. For example, there is no free lunch, Jochen, right? So we are advancing. We can process at a higher rate. Well, that means, for example, that we will be filling our tailings facility faster. So we will expand that tailings facility in 2025. That means that mining at a higher throughput rate means we need to access other deposits in the site sooner. So we need to invest on the roads, on the land compensation, on the access to those new portions of the deposit. So what we're doing is accelerating investments, and that will help us unlock a throughput rate that allows us to produce between 140 and 200,000 ounces of gold annually in our life of mine plans, right? So that is an immediate high value opportunity to expand ounces in our mine plans. So we are saying we're losing ounces at San Jose, which, by the way, today are our highest cost ounces. So we're losing high cost ounces, and we're planning to replace those ounces with the expansion at Séguéla, which are our lowest cost ounces today, right?
Absolutely, yeah,
so
that makes sense.
That is, the Séguéla expansion will not completely offset the ounces that we are losing from San Jose, at its peak production rate a couple of years ago. But then we have Diamba Sud, which is a development project, still has development risk. I view Diamba Sud still as an advanced stage exploration project where we are advancing engineering and environmental studies. But I mean, we're talking about the opportunities in the portfolio, right?
Yeah,
short-term, high-value opportunities, Séguéla expansion, and more midterm opportunity, the Amba Sud coming through, right?
Yeah. Would you say the Amba Sud, just an estimate, I know forward-looking statement, but would you say by the end of this decade, it's definitely in production or
You
earlier?
know, at the Amba Sud, we have still a sub-million ounce resource. I would like to see that grow to 1 million ounces at least, to support production of at a minimum 100,000 ounces annually for a number of years. So we still have to get there. No, we're hopeful we will. But concurrent with that, but let's say if we get there, let's say in 2025 we get there, we are on a parallel track advancing environmental studies and engineering studies. So if successful in 2025, late 2025, we can maybe making a construction decision or advancing, critical aspects of the project towards a construction decision. So if successful with exploration and we get the project where we want to see it, I would feel comfortable to say that if we achieve that in 2025, for sure, it's a project that could be in production before the decade.
Yeah.
So,
Super. Now that's perfect. Yeah, because I saw also that you had good exploration success. I mean 6.9 grams gold over 33 meters at the Western Splay prospect. That's a nice number, I would say, right?
Yes. The Amba Sud is in one of the premier locations in West Africa with respect to gold endowment, right? Only a few kilometers away, 5, 6, 7 kilometers away, we have the Lulo Koto complex in the portfolio of Barrick or the Fekola mine and B2 Golds. We're across the border on the Senegalese side. But it's structurally, geologically a complex deposit, like all of those deposits in that part of the world are. No? So I think the team has done a good job over last year in really enhancing our geologic knowledge and advancing new deposits like Western Splay and Caracara with a much deeper understanding of the geologic controls and therefore a more robust geologic model, right? And that is key here, right? Because the geology is not that simple.
Absolutely. It looks also like at Lindero, you invested also a lot in Argentina, right? And it looks to me like now this starts to pay out.
Yes, we're coming out of a capital intensive phase. We basically reinvested all the cash that we generated in this one big project that we have, which is the leach pad expansion. The leach pad expansion is basically complete. The project team delivered the expanded leach pad to operations in the month of October. So since October, we've been placing fresh ore on the leach pad and it's in service. The project will be, what we're doing right now is working on some ancillary services, facilities around the operating leach pad, but everything should be complete by January, February with the demobilization of the contractors. But we're looking forward to a strong 2025 where we don't have those high capital demands anymore. Our strip ratio into 2025 is going to be a bit higher than 2024. So year over year, our strip ratio for this 2025 goes up a bit, just a feature of where we are in the deposit. But we expect healthy cash flow generation out of that mine, particularly this year.
Okay, cash flow, that's also one of the keywords. You said you want to give back also to the shareholders then, but I understand that's maybe a little bit too early for next year because you still have the Amba Sud as a big developing project, and I think it's maybe wiser to use the cash flow for that project to bring it into production. But what could happen, or are you planning different?
You know, we have a non-core issuer bid in
Share
place.
buyback.
No, we have a share buyback program
Mhm.
in place,
Mm.
and we have you know, particularly at a time like this, you should expect to see us actively in the program, no, in the market. We plan to update the market on our market activity
Mhm.
on a quarterly basis or on a news release.
Mhm.
But we have the program in place, and you should expect to see us active in the program.
Okay, super.
Now, how do we manage the priorities? Because this goes back to the discussion of capital allocation priorities. How do we manage the priorities? I go back to what I've been saying. First has been strengthen the balance sheet. Second, invest
Mhm.
in the portfolio.
Mhm.
And third, you know, return to shareholders. What
Mhm.
means do we have right now? The share buyback program. Are
Yeah.
we generating good, healthy cash flows? You know,
Yes.
by year end, we have liquidity available to the company, $400 million.
Mhm.
So, you know, I believe that we're in a position and have the flexibility because we have built that flexibility for the company to
Mhm.
manage different aspects of the business, like a growth project and potential returns to shareholders at the same time, right?
Mm, absolutely. What is also of interest to me is the AISC costs at Seguela, for example. They were 1176. That is fantastic. I think group wise it was 1678, if I'm correct, if I remind that correctly. $90 was because of San Jose in addition. So where do you see, let's say for next year, a possibility to bring those costs further down? I mean, the world average is 1,560, I think.
Yeah, when I think of cost, uh, I first see the cash cost,
Mm-hmm.
right? And cash cost was around $1,000
Mm-hmm.
on a consolidated basis, right? That was my cash
Mm-hmm.
cost. So I believe we have done a very good job managing cost. We're not seeing any significant inflation. If there is anything that will move our cost
Mm-hmm.
or move our capital into next year, will be the features of our deposits. For example, strip ratio, right? Higher stripping or things like that. But we're not seeing any projects coming out of left field or things. No. So I believe our costs are traveling well,
Mm-hmm.
and or or if we see cost increments or capex increments uh, are driven by features like strip ratio just because of where the mine sequencing is at a
Mm-hmm.
given point in time.
Mm-hmm. Okay.
So I'm not seeing any significant inflationary pressures
Mm-hmm.
or anything like that. Uh, we will be seeing some higher stripping at some of our mines.
Mm-hmm.
In 2024, Seguela has been mining at a strip ratio of 6.x. But remember that at Seguela, the strip ratio for the reserves is around 13, 14, right? So
Mm-hmm.
slowly, Seguela will continue to gravitate towards the average strip ratio for the mine,
Mm-hmm.
right?
Okay,
For the
super.
life of reserves. And at Lindero, we are also expecting a bit more stripping.
Mm-hmm.
But outside of those things that are in our field of view, right? We don't see any
Mm-hmm.
big capital projects or
Mm-hmm.
surprises.
Mhm. Okay, super. If you look back to 2024 now, I mean, we have the first 9 months. This quarter is already half past. If you look at your exploration, what you have invested, have you replaced all the ounces you have mined with new resources and or reserves?
We plan to produce a resource estimate for Seguela before the year is over. And I think that should help answer your question.
Okay.
We produce a consolidated resource update every year, or annual publication of resources. That takes place around late February, early March every year. We have decided to, in the particular case of Seguela, publish an interim update on resources, and you should expect to see that before the year is over.
Okay, super. Then, of course, the question of the question: what is on your Christmas wish list for 2025, aside a gold price of 3,000 or plus?
Health and a rewarding 2025 for everybody, I guess. I mean,
that sounds good. Okay, then for the business.
and for the business, I am excited. With where we are and how we are moving towards consolidating what was in our strategic plan. It's not achieving a strategic plan is not something you do in 1 year or two. It's something. No. So what was in our strategic plan was consolidate Fortuna as a 500,000 ounce per year producer with competitive costs at or below the industry average, which today is around $1,500 per ounce, with life of mines of getting close to a decade plus, right? 10 years. So we're getting closer to that. And as we are achieving that, we are also find ourselves in a position where we can capture the benefits of higher prices. I am investors and reporters many times ask me, Jochen, what do I think of gold price? And I am a very boring person, particularly for that discussion, because I'm price agnostic. And I will give anybody a bit of advice. Never ask a mining CEO what do they think about gold prices, because they always give you a skyrocket number. No?
Yeah.
But even though I am price agnostic, we do work for moments like this, right? We invest throughout the precious metals price cycle precisely to be able to find ourselves at a time like this, when we have meaningful production, competitive costs, and just are in a position to capture those expanding margins. And we have placed the company in that spot. So what am I excited about in 2025? That we had done all of this work, and we come to this junction in a position to reap the benefit of rising prices. So if prices continue to rise, personally, I believe they will. But if prices continue to rise, we are in a tremendously strong position to continue capturing those benefits. And you're seeing it already in our quarterly reporting. Right?
Okay, super, perfect. That was great. Thank you very much for the last half hour. I'm a happy shareholder, and let's hope for 2025 that things move like you want it, like you planned it, like your strategy is, of course. And as you said, stay healthy. I think that's the most important thing. I wish you absolutely the best. Have a Merry Christmas, and we talk in the first quarter.
Likewise. Thank you, Jochen.
Thank you very much, Jorge. Yeah, ladies and gentlemen, that was Jorge Ganoza, the CEO of Fortuna Mining. And yeah, you heard it. Things are really going extremely well. The first 9 months were super, record after record. And they, probably, or for sure, we will see the $1 billion revenue for the first time in this company for the whole year in 2024. Share buyback program is in place. Please don't forget it. So they return already money to shareholders, and things are really going well. Lots of growth for the future here for the next foreseeable 3-4 years. And the costs are also in line. And I would say you really should have a look onto this fantastic company. We are very positive on it. I'm a shareholder. You should maybe do that too. So thanks for watching us. All the best. Merry Christmas.